Dharmesh, what do you do on a day like this? Do you buy, if at all we're seeing a gap up of say 500 points plus, do you still go out and buy? Do you wait? What do you do?
Yeah, good morning, Harsh. I mean, there are certain large cap companies which have corrected quite a bit. And even if, my own sense is this is going in a constructive way, eventually it will be sorted out. There can be still few skirmishes here and there. Things gets totally settled down. But going by the tenor and the look and feel of how things have happened over the past few days, particularly from the US side, does look like they want a graceful exit and settlement out there. So having that in mind, I think there are plenty of good opportunities out there which you should buy, even if with a clear understanding that there can be a 4-5% correction after you enter today. But in the long term, things are likely to shape up well. And I mean, the immediate name which comes to my mind is maybe Alassane and Dubro from the large cap space. So whatever orders which are getting stalled will, get reinitiated. At the same time, large, flows can also be there. From the mid and small cap space, name like Welspun Corporation, which is a pipe supplier, have a significant presence in Middle East as well. So the companies which are likely to benefit from it, not directly from the crude oil linked trades, but otherwise from the infra play, looks pretty attractive. And the one space which has not performed well over the last few days, it has been oscillating, is a defense space. So the numbers were great. I think that is again one can go with a long-term perspective. But only one caveat which I would suggest right now is don't buy it with a clear understanding that things will go up and up from here. It will take its own time. You can have a 5-7% kind of a downside even after entering today. But fundamentally, over a long-term perspective, having light to the business updates which has come through, I think the bottom is already in place.
Bottom is already in place. Okay, so Dharmesh looking positive. Dharmesh, if you were to buy today, what do you buy?
Yeah. So first is, I mean, from the infra space, L&T, the big name out there. So I would be sticking my neck on the large cap space rather than nibbling into mid and small cap by and large. And there, I think banks offer a good opportunity because if you look at the credit growth numbers, they were, a very strong set of numbers which came through. But the doubt was going forward into, next 2 quarters, there can be some NPA problem coming in. Today, monetary policy also will hold a bearing to that. Most, I mean, accommodative stance for MSME segments the measures have already been announced. But let's see if the policy does something more today, then definitely that will help them out for a near-term perspective. So, but again, here you have to play the large cap like Axis Bank. I have been advocating IndusInd Bank for quite some time because the entire rebuilding mechanism in place. It may take a couple of quarters, but valuation-wise, it looks pretty attractive. From the public sector banking space, Bank of India and Bank of Baroda, which came out with robust, credit growth numbers, looks pretty attractive to me. I mean, the price correction already takes into account the credit problem or the provisioning problem, which may be there in Q1 and Q2. So that's already built into the prices to understanding. So that's the one sector which I will be dabbling into. And third is the defense space, which we have been, recommending on all declines. And there, I think BL and HL stands the topic. BL came out with a good set of numbers, around 16% kind of a revenue growth. HL, despite all, problems, reported 6% kind of a revenue growth. And going forward with G engine supplies in place, order book is already very high, almost 7x book-to-bill ratio. With executions, falling into place, I think this FY27 year would be quite, beneficial from them. Metals as a space has been, it's oscillating space, but, it has been rewarding well. Going forward with all infra activities being pushed into play, is a good area to be in. And there the topic remains, Hindalco and Vedanta with NMDC. The numbers were strong and the management guidance is around 25% kind of a growth, around 60 million tons of iron ore production they are likely to do this time around with prices, again firming up. So these are the pockets where, one can go long into for at least have a horizon of 9 months to 1 year period.
How do you look at earnings growth for FY27? Do you see impact of West Asia, on the earnings and margins for companies going into FY27?
Yes, I mean, this is a very moving, post. And before we started, I mean, in the month of January, when we have prepared EPS growth of the Nifty, we were hovering around 1250 30 for FY26 on the Nifty EPS, and we were building in 12 to 14% kind of a growth around 1450 for FY27. And then we played out a worst case scenario. So, to my mind, had this war been extended to say 3 months or 4 months, 50 days, I mean, 40 days have already gone into it, and then this growth would have come down to say 1 2% or even a flattish kind of an issue. So, that is what our sensitivity analysis was indicating. But I mean, the things looks to be settling now. So, was I mean, still very difficult to predict because you don't know after 10 days, 15 days, again, Mr. Trump can do anything. He is very unpredictable and properly, I mean, he defines the word unpredictability, what it can be. So, I mean, if you leave that, then I think 2 or 3 percentage point kind of a hit would be still be there. But then, if that is the case, then we are ending up with around 1350 kind of an EPS for Nifty, and that at current level discounts Nifty to 17 times 1 year forward. So, there I think a lot of that's the reason why I said bottom seems to be in place, and things would start looking up. So Q1 numbers may still be a disappointment because some of it will play out in Q1, but the market is forward looking, and I think market has built in more than the fall. So as I said, we were building in 230 kind of an EPS, the worst case scenario. And even from that perspective, 22,500 to 21,100 was the base floor for us to discount. So we have been, selectively recommending that. I think, Sanjeev, the worst is behind us as far as earnings growth is concerned. And now, with all negativity built into the place and things follow the way it is, incrementally, it will be more of a positive set of numbers which will flow in.
Okay. How about you? How would you play the oil and crude kind of theme? Would you play it through, for example, an Interglobe, Asian Paints and the like? Would you play it through the OMCs? How would you play it?
Yeah, I would actually give it a skip to entire
okay.
space. The reason being, still at 90, 85, 90 kind of levels, which is higher than 20, $25 a barrel for each of them. So that will definitely impact their pricing. Volume growth we have seen for paints and like has not been there. Even for OMCs, the volume growth has not been there. So this is what the arbitrage is a trading play, and very difficult to put a finger on the valuation point. But one thing which I would like to say here is Reliance Industries. I think the type of correction which we have seen there was unwarranted, because anywhere if the windfall tax was there, it's on windfall income. It's not on the normal income. So when we were extrapolating the income in a normal scenario, we have not taken into account any windfall taxation coming into play or any windfall income built into the SOTP price. So there, the SOTP valuation for 1 year forward remains to be 1650 for Reliance Industries. I think it's a good time to have a portfolio allocation out there with kind of pricing advantage one is having. So apart from that, we are not touching any of the oil sensitive plays.
Dharmesh, how do you look at real estate companies? We've seen significant correction to them in the last one quarter.
Yeah. Sanjay, I think the majority of the upside move has already played into most of the real estate companies. The last 1.5 years, they have been, oscillating in the range. Though the numbers update by Keystone Realtors or Raymond Realty was quite good and aggressive. But we don't have a view that, I mean, interest rates are going to come down in near future. It may stay there or maybe even firm up by 25 basis point for the year, remaining part of the year. At the same time, the cost of materials has gone up, and this is likely to stay. The input prices are not going to come down immediately for real estate companies, and we are seeing metal upcycle to be played out. So steel and all, which goes into today's new constructions, will be high, and they are unable to take on price hikes. So on ground check, whichever area you do, at least 10% kind of a discount is easily can be negotiated on the table if you are putting the money to buy a flat or something like that. So pricing power is not there. Input prices are going to go up. Volume may remain slightly muted going forward into this year, FY27. So as a play, as a sector, we are avoiding that space completely.
Dharmesh, forget about the crude sensitivity. Just purely driven by valuations, you think Interglobe is a good case in point right now to buy into?
Yeah, but you cannot forget, crude sensitivity with interglobe aviation. But that's the 40% of almost around 40%. It keeps on varying depending upon where the pricing of the crude is there. But yeah, just on the kind of the capacity they have put in place and the expansions which they would be taking on the fleet side. And I mean, it's like a duopoly kind of a scenario as far as domestic airways is concerned for interglobe. So definitely, if one is a holder for say at least 2 years, 3 years, it's a very good buy because to my mind, eventually 1 year down the line, we would be still looking at crude prices around $70 a barrel because that was the actual fact, and it will drift down lower. This is just an aberration in between. So having that in regard, definitely it's a good value buy. And we have I mean, 2 year, 3 year, if one is willing to wait. So the price targets are quite high, despite taking into account 10% cut in the flight size with the new norms in place. 6,000, 6,500 is what we are penciling in for the valuation multiple of intergroup valuation. But one has to be patient for a year and a half for that.
Okay, but let's just wait for those rates to settle down. Suffice to say, there is going to be about 3 to 4% of a move on the index alone. But Rajesh Palvia as well joins in right now. Rajesh, hi, morning. Bracing ourselves for a gap up move. What trade would you recommend on the Nifty and what levels are you monitoring next?
Good morning, Aisha. Good morning, everyone. So it's going to be a big gap up opening, and almost we are trading around 23,800 in the GIFT Nifty. So which is the immediate supply zone based on the call concentration. But I think looking at the this big gap up opening, and we may see a short covering action in the opening itself, and maybe Nifty may attempt to move towards 24,000 level also. Even in the bank Nifty also in the previous day, we managed to cross 52,700 level on a closing basis. That's the important level. And I think if we open around 53,300, 400 zone, I think here also we may see a short covering action and then possible extension of this pullback towards 54,000. We could see for bank Nifty also. Lot many large cap stocks have witnessed a buying action in the previous day itself, and I think continuity of uptrend we may see in the most of the large cap space like IT, large cap banks, metal, pharma. All these sectors are looking promising. Even short covering action may trigger in automobile space also. So I think it's a gap up opening, and I think one should remain on the long side of trade till Nifty is holding about 23,600. I think if it continues to trade above these level, I think 24,000, 24,200 would be the next target for Nifty.
Dharmesh, the other thing is what happens, or rather, Rajesh, the other thing is what happens to the mid-cap end of the market and whether that's going to lead in terms of a move as opposed to what you may see on the front line, Nifty and Sensex or Nifty Bank perhaps. And then what are your specific ideas from within mid-caps?
So yeah, definitely we have seen, some sort of bottoming out formation in the mid-cap Nifty itself. If we go with the mid-cap Nifty future, mid-cap Nifty future managed to cross 12,500 level. And I think that's the immediate breakout on the near-term chart. And looking at the accumulation activity in most of the mid-cap stocks in last couple of trading session, which clearly giving us confidence that if mid-cap Nifty manages to cross 12,900, 13,000 level in the opening itself, I think here also we could see good short covering action, and mid-cap Nifty can scale to the next target of 13,500 to 13,800. So I think one can remain on the long side for mid-cap Nifty also. And lot many mid-cap stocks are showing sign of accumulation in last couple of days, and we could see continuation of this broader market to perform in this up move. From mid-cap side, I think some of the banking stocks are also looking attractive. KTK Bank is looking attractive from cash segment, and I think the way KTK Bank is holding up, I think here we could see a breakout about 235, and once that happen, this stock has potential to move further higher to 250, 260 also on a positional perspective. So one can buy and accumulate KTK Bank also with stop loss of 220. Again, we may see a momentum in some of the metal space also. So here we could see National Aluminum is looking attractive. Possible target on the higher side would be around 435 to 440. Buy and accumulate would be the strategy with stop loss of 402.
Right. Okay, that's the take right now coming in on.
In a single day, that's a very strong move that we're seeing. Uh, before I take a call from Rajesh, Dharmesh, let me come to you with regard to the realty pack. You've got a few realty stocks which have disclosed numbers, more to come very likely. What's the kind of update that you're expecting from Q4? Give us a sense of that, and whether realty, which is at now pretty much a 104-week low, if I'm not wrong, is a good buy at this point.
No, sure. I don't think realty is a good buy at this point of time. Because the numbers were good. I mean, Keystone Realtors have given a good set of numbers. Raymond Realty came out with a decent set of numbers. But one has to look at it from a point of view that their input costs have already firmed up. It's likely to go up. Pricing advantage has not been there. Most of the deals are happening at a discount of 10-15%. At least in Bombay region, Purvanka and all, whoever are launching their projects, they are straight away for sitting on the table, 10 to 15% kind of a discount on the MRP price which they are quoting, you are getting out there. At the same time, interest rates are likely to firm up. If even if it doesn't firm up, it's likely to stay where it is. So the mood is not that great for the realty space. So I think this year would be more of a time-wise consolidation for the entire real estate space, having regard to a year before they have seen a good 2-3 year kind of rally. So to us, it's more of a neutral to avoid zone.
Just to add on the airlines,
Yeah,
so that's a relief for many of the airlines where the cost is escalating for them with respect to the ETF cost which is coming in.
But now they can charge higher ticket prices for sure. At least
they
the
have
cap
to pass
on that has been lifted.
Yes.
So yeah, it's a double win really for aviation as a pack in that sense. Also want to check in on OMCs, CGDs, the sharp fall in crude prices that you've seen overnight to the tune of about 13% definitely must be giving a fillip to most of these OMCs, and you can see that big trade play out over there as well. The Gulf EPC companies, cap good companies, should the ceasefire extend into some sort of truce? Let's see what happens to the likes of L&T, etc. L&T, of course, holding up 6% or so. Dharmesh, do you think this could be a good trade right now, any of the EPC construction companies? Because the rebuild of West Asia is where I guess there will be a meaningful opportunity for some of the Indian companies.
Definitely, yes, Aisha. We have seen that, 10, 15 years back when the Gulf War was there, L&T was the prime, a winner out of as far as the awards are concerned. And the concerns regarding project execution getting delayed or, new orders not coming with the same run rate gets allayed now. And definitely, I think if at all, it will add to the run rate of the order inflows from the Middle East region for L&T. So, but that remains the topic out there. One more company which one can look into at current juncture is Welspun Corporation, which is basically a line pipe and ductile iron pipe supplier for export of oil and water system, and it has a significant presence in Middle East as well. So our interaction did suggest that till now their execution was not disrupted. In fact, they are expecting big order flows to be into play. 24,000 odd crores of order book they are sitting on, and it's available at 12 times 1 year forward PE multiples, so quite cheap to that mine. And we expect around 17 to 18% PAT CAGR going forward. So valuation wise, I mean, both the companies, L&T already sitting on a strong order book, and Welspun Corporation looks pretty good, which is a straight play on infra space and on the Middle East as well.
Okay. Rajesh, private sector banks, what's the call there?
Yeah, so private sector bank is also, showing a recovery from the lower level. I think some of the mid-cap private sector banks are looking promising. RBL Bank has managed to give breakout on the near-term chart, and looking at the setup, we hold bullish view, and the way stock is trading about to a 300 mark. I think here there is a potential of 330, 340 kind of target in the near-term perspective. Again, on the Federal Bank also, we are holding bullish view. Stock managed to give breakout on the weekly chart, and looking at the breakout, we believe that upward trajectory towards 290 to 295 we could see in the positional perspective. So buy and accumulate would be strategy for Federal Bank. On the downside, 268 needs to keep as a stop loss, But on the large cap private bank, I think ICICI Bank is showing sign of recovery from the lower level and now negotiating with its falling channel supply zone. Any breakout about 1260 may attract more buying action, and then stock has potential then to move further higher towards 1300 to 1320. So from private sector on the large cap side, I think ICICI Bank would be our choice with stop loss of 1210.
Okay, ICICI Bank, the top choice to trade right now. Just 2.5 minutes left to go before we actually move forward. But Dharmesh, just wanted to get your sense. We've spoken about a lot of sectors and spaces, but irrespective of what's going on in West Asia, while I know we can't really decouple ourselves from, what's happening within the global piece, any sector that's looking like a safe trade right now?
Yeah, actually, I mean, the metals is one space which I think will continue to, go up. It's in a structural bull market, and the other sector which looks pretty good to us is a defense space. So high order book, sticky, business in place, and execution likely to improve going forward. So these are the two spaces which looks like a safe bet. Metals, I can name you a couple of stocks. Hindalco and Vedanta looks pretty good to us, including NMDC. All reported very good set of volume growth with increasing sales realization. And in the defense space, BEL, which reported good set of numbers, around 16% kind of a growth with order book swelling above 74,000 crores, and HAL, which is an order book in excess of 2,50,000 odd crores with 4% execution, but going forward, execution is likely to pick up. So these four companies look pretty good to us, and these are the two spaces which, irrespective of what happens, are likely to see traction even on bad days.
Interesting. Rajesh, very quickly, a call on defense.
I think from defense, most of the stocks are behaving in the same manner, and looking at the structure, BL would be our first choice to buy in the defense spec. Stock is comfortably holding about to a long-term breakout area. And looking at the structure, we believe that till stock is trading above 415, there is a possibility that stock may attempt to give breakout of the previous swing high of 440, 445 zone, and once that happen, stock may scale to the next target of 470 also. So here one can go long. MTAR Tech is also looking attractive. Here also one can look to buy a fresh breakout on the chart, and I think stock has potential to extend gain towards 4200 also. So one can look to buy this stock also.
Okay, counting down to the market